In the DeFi Part 1, we talk about part of decentralized finance. Send money around the globe. Stablecoin. Borrow and lend. Flash loan. Today, we are going to talk more about this topic. No-loss lotteries. Decentralized exchange. Fund your idea. And insurance. In the traditional lottery system, you put your money to buy in tickets without refund. While most cases you cannot win, so your money will be ate up. In contrast, in the decentralized world, you can get full refund when you play with no-loss lotteries. You can stake your die into pool together and get paid die as representing your tickets. If one of your tickets is picked as the winner, your P-die balance will increase by the amount of the prize pool. If you don't win, your P-die rolls over to next week's draw. You can withdraw an amount of regular die that's equal to your P-die balance at any time. You may wonder, where does the pool prize come from? Large amount of wallets play on pool together. Thus it has a great assets pool. The pool together can make money by making use of other DeFi products. For example, it can deposit DAI to Aave and get interest from a DAI. The interest is the source of the pool prize. Now, let's take a look at centralized exchange. In order to create an account, you need to submit your private profile, such as passport. This privacy is in the risk of being hacked. One of many disadvantages of centralized exchange is its limited codes for trade. Your favorite portfolios may not list it, so you have to switch to other less favorable coins to buy. In addition, centralized exchange has limited ways of earning. You can only stake in certain DeFi products, and the exchange will share a portion of your earnings. What's more, you have to trust the centralized exchange, since your assets are not in your control. The exchange, especially those small ones, may disappear overnight and you will lose everything there. In a decentralized exchange, you don't need to submit your personal information to get account. You have almost unlimited pairs to trade. What's more, you have access to all DeFi products, such as Pool Together, Polygon, Aave, by staking your coins to the contracts or delegate to a validator. There are other numerous DeFi products by which you can grow your portfolio and get passive incomes such as Yearn Finance, Curve, Banca. In the centralized finance, to fund your idea, you need to have someone from an invest bank, such as JP Morgan, Morgan Stanley. They will assess your project and determine the total shares to sell to crowd, and the price per share. In addition, they will determine the percentage of shares they own before crowd sale. After all the compromise, your shares will be listed in a stock exchange for trading. All these processes will be under the supervision of SEC, Securities and Exchange Commission. You need to pay lots to those invest banks. In the decentralized finance, it is much more simple and open to fund your idea with crowdfunding. It is called ICO, Initial Coin Offering. Potential funders can come from anywhere. Ethereum and its tokens are open to anybody, anywhere in the world. It's transparent, so fundraisers can prove how much money has been raised. You can even trace how funds are being spent later down the line. The fundraising process is determined by the smart contract. Investors send Ethereum to smart contract, and in exchange, the contract will issue tokens of the project to them. In the world of decentralized finance, it is much more flexible than fundraising in centralized finance. You can set up a capped crowd sale, which will have a maximum amount of assets raised on the whole project. You can also set up capped crowd sale for individuals. Here you can open the fundraiser only to certain group of people with a whitelist. You can also make a staggered fundraising to increase the price in later stage. Lots of projects intend to set a deadline for fundraising with timed crowd sale. And there are more ways. In sub-Saharan Africa, only 3% of smallholder farmers use agricultural insurance coverage to protect their families' livelihoods. Accessible and affordable crop insurance is crucial for smallholder farmers as a means to increase their resilience to the effects of climate change. Unfortunately, traditional insurance isn't working for them. Available insurance covers are expensive. And there is little trust in traditional insurers due to cases of delayed or absent claims payouts, as well as a lack of transparency on the data used to determine claims. Thanks to the financial and technical support from Chainlink, there is an innovative crop insurance built on Ethereum and indexed to local weather parameters. Chainlink's decentralized Oracle network provides a reliable connection to different external weather data sources. During an extreme weather event, policies are triggered by the data and automatically result in fair, transparent and timely payouts that can't be tampered with by the insurer. A study found that the use of Ethersk's smart contract technology will reduce the costs required to issue a policy by up to 41%. For farmers, this brings premiums down to an affordable cost level. Thanks for listening to the end of this video. If you feel this can benefit, please upvote me. If you want to know more about the knowledge of cryptocurrency and blockchain, please subscribe my channel. See you next time.